we've always seen SMEs suffer to get loans, even mid-corporates dealing with a couple of millions of dollars. When they go to the bank, we have high rejection rates. Especially banks are looking for audit financial statements. Right. So when we look at this economy, which is tax-free economy, most of these corporates say, what shall we do? Because since we're not reporting our earnings to anyone, we don't have to pay tax. What is like KPMG doing, and let's say consider the big four, and creating more like public awareness for these organizations to get their accounts in place?
Yeah, I think it's a good starting point. In the absence of any regulations to have a mandatory audit, I think an audit always is very good practice to actually adopt, not just from raising finance through whether it's be the capital markets or whether on a smaller scale in the SME markets, whether going to the banks. I also think it's very good sort of internal procedure anyway. It allows the business owner to get an independent view of his or her business, how it's performing, and also looking predominantly at the historic performance, but also then projecting some of the trends that it's going to experience going forward and its necessity and its ability to raise finance. But if you take that going to the financial institutions, I think a good track record of audited financial statements is very important. It helps the bank understand the risk better. It also, I think, ultimately gives the bank a lot more comfort that you have a solid track record, a history, and therefore, if you've had a solid history, independently verified, therefore your future projections, which you're actually going to look for the loan to finance, whether you're building a new warehouse or expanding your business overseas even, you're more likely to get a warmer reception, a better understanding from the bank itself if you have that independent audited financial statements to present to the bank when you go for the loan application.